Hey, Alpha fan, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sea of green on the crypto charts as well as the massive pump that we've been seeing in Bitcoin, which this channel did correctly predict that we would likely be hitting that $27,000 to $28,000 level. And sure enough, where's Bitcoin today? 27,300 and some odd change. Now, guys, of course, when Bitcoin does find a little bit of a pause while being bullish, then of course altcoins have a chance to catch up, and that's what you're seeing with some of these coins pumping as much as 30%. Some obscure coins maybe even more, but on average they are pretty much just keeping pace with Bitcoin around that 3 to 5% area, with a lot of the better coins going upwards 10%. And so, guys, it really is still Bitcoin season. But as Bitcoin starts to taper off in its pump, then of course it's going to start turning back to altcoin season. And those who are saying it's altcoin season right now, they're not correct. Bitcoin is still dominating. Simply, this is a good time to be getting into your positions with altcoins as they are a relative good value. But what you have to remember is that if Bitcoin does collapse, your altcoins could collapse faster. So just to be careful, it is a double-edged knife. Guys, we do have some news coming up on Wednesday, March 22nd, this next week. The Fed will be making their decision about interest rates. And right now, the market has 62% priced in that it's going to be 25 basis points. So if it's 25 basis points, well, maybe we're going to take just a little bit of a wobble to the downside, perhaps, in the markets, but probably nothing too serious. If it's 50 basis points, however, it could just drop us. And ironically, if it's no increase, it could also drop us just because it would show some weakness in the economic system that would have prevented Powell from increasing interest rates here in the US, and that could shake markets a little bit also. Now, if it wasn't for the banking situation that we're having right now, all of these banks on the brink of collapsing, then normally no rate increase would have allowed the market to pump. But again, people would be wondering, why didn't you increase rates if inflation is still here? They would be saying, oh, maybe something really bad, could happen. Okay. So that's the psychology here. 25 basis points really is the sweet spot. 50 basis points is just going to be heavy handed and sink the market. And then no increase is going to spook the market because they might wonder what's going on. Guys, let's take a look at the Bitcoin chart. With this latest pump and this kind of, we had a little bit of a pause here in this $26,000 to $27,000 area right here, and it did make me realize that we were putting in this type of a channel here, which we have now, I believe, successfully broken out. So a lot of traders that you may have been watching on YouTube, they've been talking about some type of, I don't know, what are they looking at? They're looking at some type of some type of a funnel, some type of a megaphone kind of pattern, or they've been looking at some people have been trying to look at a rising wedge here. Some people have been trying to look at some type of a broadening, rising wedge. And so there's a couple patterns that people have just been looking at, and they are all bearish patterns that they're looking at, okay? And this, except for the megaphone, could be considered a continuation pattern, which more or less is what we got. But this is not a perfect megaphone by any standard. So really, I just wanted to challenge that idea because the Alpha Fam has kind of been coming out this that maybe we were putting in a parallel channel. We've been talking about that for a while over here, and that this was some sort of deviation. Okay, like we lost the channel, and essentially we went to a new area. And what I wanted to point out is that this was actually correct. This was the correct model. And what we're actually seeing here is the top of a channel, a mid channel, and then the bottom channel. Now, what does this imply? Well, if we're breaking out of it, we could just be having a deviation to the top, and then we come back in, we retest the mid channel, maybe lose it, and then we find our way back down. Now, why could I suggest that that's possible? Because that's essentially what we did over here, okay, in 2022. We had this kind of top area. This would be essentially the same as what we did right here. Then this deviation down would essentially be what we did right here. And then this deviation to the top, just kind of, it wasn't really a deviation, but it hit the top of the channel again, and then it came back down and it lost its footing. So this is what would be the bearish scenario. If you are somebody who's looking for something to potentially drive this market down. Let's say that this is some type of an Elliott structure here, then if it's a negative Elliott, then you could say wave 1, wave 2, wave 3, wave 4, and wave 5 would probably be the fifth and final wave. And then most likely we would have a correction after the fifth wave, and then that would be maybe like an ABC to the upside. And this would be a very bearish scenario. But the bullish scenario, of course, by the same stroke, is that this was a just an ABC correction, and now we're doing just the one, and maybe there's going to be a 2 pullback somewhere eventually, and then the 3 is going to be a massive run, to something. Okay, so the bulls are counting on this having been the corrective wave, whereas the bears are considering that this was a 5 Elliott wave to the downside, and that's a matter of opinion. I don't necessarily wholly believe in Elliott wave theory. I think sometimes, it actually has to complete before you, before you're able to say what it is. And so if you have to wait for it to complete, then its predictive value is much lower. But as far as trying to look outward, everything's pretty much a projection. So just thought I'd share that perspective because I do find Elliott waves interesting. I just don't personally use them, but I do like to just consider them and keep them in the back of my mind. Guys, if we take a look at this one, then we could project a channel above it. So let's just ignore the bearish scenario, and let's just pretend that this was a range, as I've kind of hypothesized for maybe a month or so now, and that we're breaking out of that range, and that if we hold this new range, let's say we have a pullback, not lower than 26,000-ish, right? And definitely not lower than 25,000, then if we could hold on to that range, then maybe we could chop up this one. Now, why do I think that that's possible? Because we have this little area right here, okay? Look at what price action did previously. And if we consider that this is the top, right? This was previously a support, and if that's now being communicated into a resistance, then that's probably where we would top out. And so if we do get a little push here, this is just a hypothesis, guys, based upon this little area right here and this little area right here, and then also, of course, my channel concept, then that would see us pushing as high as, maybe we could have a little deviation up here, and then maybe 33,000 before we have a significant pullback. Otherwise, the alternative, really is that we fall back into this channel. And if we do fall back into this channel, then just based upon this channel theory, then we could perhaps catch ourselves somewhere around $24,000, let's just say. And that might make people really bearish, but it could refuel the car, so to speak, and that could carry us into another type of bounce. Now, we could also come all the way back down, just put the fear of God back into the market, and then supercharge the car somewhere around $22,000, and then just do this stuff again, right? And if you take a look at that, again, from the Elliott wave perspective, that would be a wave 1 and then the wave 2, and then we would start a wave 3, which would probably be the longest wave, and then we would have a pullback somewhere, and then maybe do a completion, and that would be 5 waves, right? That would be a really baby one compared to this correction, but anyway, you could imagine something like that. So guys, I just wanted to get a little bit of a price action kind of analysis over here. However, just in principle, what we can see is that we have a higher high than this high over here, and so absolutely we have a higher low and a higher high, and so we are in an uptrend. Okay, no matter what anybody wants to say on a bearish level, we have an uptrend right now, and we've done this before, right? And it's come into failure somewhere around this area, right? So again, just don't be surprised if we do end up having some type of a strong push down with some weak economic news, some type of a tragedy in the global markets, the banking system, whatnot. So don't be a perma bear, don't be a perma bull. Just be on your guard and understand what we're looking at. Now, if we do jump over to the weekly, we can see something totally different than we've had before, where this area over here was really just kind of just a concentration of EMAs, just giving us a little bit of a pop. We never really twisted them over. We never really folded them over themselves. Whereas down here, we're folding them over. Okay. Not only are we folding them over, but we've also recovered the 200 weekly EMA. Okay. We've recovered the 300 when we had this kind of massive dip underneath the entire chart here, just putting the fear of God in everybody related to the FTX stuff. And we slightly lost it during the USDC DPEG, again, just freaking people out. But both of these seem to have turbocharged us, again, like getting that rocket fuel to just push above that 200 EMA, which does put us in a position that this squeeze could continue even higher. Whereas this squeeze up here was nothing like that. Okay, it was nothing like that. It's just too high up on the chart. It wasn't a good relative value, and again, we could see that if we pulled a fib up here, we would obviously be above the 50% range, right? But now we're below the 50% range. We're a relative good value. We went all the way down to the 78%, almost 80%, right? Drop on this chart. And so that's a relatively good value. Professional traders are perfectly happy to buy in those areas, okay? And so if this was a bit of accumulation down here, then there could be a rally, maybe a mid-cycle rally. It might not be a full bull market, but it might be a mid-cycle rally. And then these buyers might just end up taking their profit anywhere between pretty much where we are, like 26,000 all the way to it could be even 50,000. It just depends on how much bullishness comes into the market, depending on events around us in the global economy and what can be supported by the macro there. But as long as it's supported, we'll probably continue to pump based upon this structure. And, if things have to be cut short a bit, then maybe we have to come back down to a relative good value for people to buy again. That's when the extended bear market could happen. See, this is like a mid-cycle rally here. Huge pump, but it just doesn't succeed in becoming a bull market, right? Came all the way back down, back to a relative good value, and then the next bull market started, right? So something like that, just consider it kind of like a detour on our destination, but a really fun one, right? Like maybe you're stopping at a theme park during the bear market, right? On the drive through the bear market there. Just try to put a little bit of a concept behind what we might be seeing. You do see this massive kind of like shoulder over here, and then this kind of blow off top here. We could be getting something similar to that, just a little nice shoulder, and then a couple spikes and drives up, maybe even to the, again, like 30s to 40s, maybe even 50s if the Super Bowls come into play. But otherwise, we should expect this to eventually end up topping out and then coming back down to a relative good value, usually a higher low than the low before it, but you never know. We've never had a double top before, so maybe we make a lower low this time. Just depends upon the global markets again. And, this drop over here during the virus era, that was pretty much equal But before that, all the charts were higher. So if this is equal, then maybe the next one could be lower. You never know, right? Just have to be open-minded to this stuff. Maybe the guys who were projecting 10K or even lower, maybe they end up being correct. Okay, it's no skin off our back, right? We had a mid-cycle rally, and now it's time to crash again after we have a mid-cycle rally, and then we can pull ourselves back up. But just keep in mind, this rally isn't necessarily over yet. And in the rest of this episode, I'm going to show you the key levels to watch. First thing that we should do is just put on some 4-hour, price levels there, so that we can just get a good idea of what's happening perhaps this afternoon, right? Let's see here. So what you can see is that we have kind of stalled, and oh, why? Yeah, while I was filming this episode, you can tell that we perfectly lost the alpha momentum pool, and look at this drive down in losing the alpha momentum pool. You know, I swear when I started recording, we were 27,300, right? You guys remember me saying that? And look at what happened when, and this was obviously pre-planned out, right? And look what happened when we lost the alpha momentum pool. Boom, and look where it dropped down to, right to my bullish control zone here at 26,685. So guys, don't fade the alpha momentum pool. These levels that I give you, they really are significant. And unfortunately, I wasn't able to get this video out in time for anyone to short this trade here, but we can see that this level does need to be held. So in terms of the next 3.5 hours, right? Sometimes these pushes happen right at the turn of the hour, like, at the new 4 hour. And so, they try to jump the gun before everybody else can. And that's what happened right here. But what we can understand is that if we hold above 26,685, bulls are still going to be in control. And you can see bulls are pushing back, right? They're fighting this. We are getting a little bit of a squeeze between the 4 and the 9. But if we end up holding the 9 here around 27,000, it's really going to be a nothing burger, okay? And this thing could have the potential to squeeze back up, which it's doing. Man, this is like live trading, guys, almost. So anyway, you guys are seeing my system like alive in here, and what I'm looking for is the 4 hour to close above 26,685, close above the 9 EMA at 27 here, or close above the alpha momentum pool where we get additive momentum to the upside, somewhere around 27,332, which we had just lost. And you see why I call it additive or subtractive momentum. We lost that level, and boy, did we lose our momentum to the downside. So guys, again, please don't fade the alpha momentum pool or my alpha momentum strategy here. It does work. And these levels, look at how well they are respected. Now, in order to have a bias to the upside, at least for this 4 hour period, we are going to have to recapture 27,580. And that seems a little bit away, but if we do capture the momentum pool, that could easily push us into that area to retest it. So keep your eye on this system. Again, there's 3.5 hours to go. So there's plenty of time for us to recover 27,300. There's also plenty of time to lose 26,685. And then just kind of a neutral position here is 27,000. That I would really consider that to be kind of a line in the sand for which direction this is going to push. If we do fall below the bullish control zone here on the 4 hour, then we are going to get into a squeeze with the 9 and the 21 EMA, which could bring us significantly deeper to lows, and we would be at risk around 23,840. If this thing does end up squeezing to the downside, you can see how fast this stuff can kind of squeeze, right? So again, you should be aware of these levels. We may have some support right here at this $26,000 area, just based upon my concept of these channels, right? You can see we get into a little choppy area here. Some of these wicks over here on this diagonal could hold us up. So, that could end up being just a tagging of the 20 and then we continue on our way. or we could get held up at 26,600 at that bullish control zone. But again, bears don't gain control until we're under 23,840. And if we want to be even a little bit more conservative on that, 23,000 underneath this 200 EMA and the 300 EMA on the 4-hour chart. All right, guys, that's the 4-hour for you. If any of you are able to capture that in the next 3.5 hours or so, probably a little bit of playable lines for you, okay? Let's go to the daily, which will be relevant to more viewers, as of course, not everyone watches this video within 3 hours of it being posted. But I am including the 4-hour more often just for you early birds. You get some extra benefit for your shorter term trades, okay? So please do try to watch these videos when they're released, because you will get additional insight. And most analysts are just doing the daily, okay? So if you are getting the 4-hour, it does give you a little bit of an edge. Knowing where those tighter levels are. Guys, for the daily, you can see that our volatility pivot is all the way down at 26,200. So for you day traders, personally, I don't see anything wrong with us just coming all the way down to 26,200. As long as we hold that, look, bulls are in control at 25,890. Nothing seems wrong. We have this kind of like mid-channel area here, which I pointed out, and as long as we hold this mid-channel area, then I really can't be too bearish about anything, because this does look like it could be flipped into a supportive area, whereas previously it was a resistant area. And sure, if we like zoom in here, you can see that we bounced right off of it, just proving my concept here, okay, that I introduced you in the beginning of the episode. And I'm really pleased that we were able to see this working out live on the video. Because sometimes you wonder, well, does this YouTuber really know what they're talking about? What are all these lines? Well, look at this. The line that I had marked out here before the episode even started, live on camera, it was respected. And then, of course, you saw on the 4-hour that also lined up with some horizontals. So all of this stuff is in play. You can see this EMA right here being respected. So guys, like these lines that I'm showing you are very significant. And again, please keep them in mind. We do have to hold 26,200. And remember, we can't control the charts. They can break these lines. But the key point is that if you're above this white volatility pivot, you should have a bias to the upside on whatever time frame you're trading on, in this case, the daily, right? If we're in the bullish control zone and above the volatility pivot, you should have a bias to the upside. If we're on top of support, we should have a bias to the upside, right? We're not at resistance. Like this was resistance. This was resistance. We got rejected here, but then we got accepted, and now we're flipping it into support. See what this was? This was a test to turn this zone into support, okay? A lot of guys are going to be freaking out. They're going to be giving you the wrong information. But here at Alpha Commission, we're trying to give you the right information. We're trying to give you the right key levels so that, yes, we can fall through it, but as long as we are holding them or above them, then you can understand that our bias is to the upside, right? Especially the volatility pivot. And then the momentum pool just represents an area of ambiguity, okay? Yes, if you're above the volatility pivot, the bias is the upside. If you're above the bullish control zone, yes, bias is to the upside. But if you're in the alpha momentum pool in general, you can swim around this without any major distress, okay? And it's only when you lose momentum, either our current momentum, which is to the upside here, or we have subtractive momentum by breaching this line, then we start to get worried. And you can see how beautifully that lines up with 300 EMA here, as well as this 9 and 21 on the EMA. So guys, you don't need all this fancy analysis. You can also just use your EMAs, but I do like to set levels based upon 4 momentum indicators, 5 if you consider the EMAs, and then of course other considerations like volatility and just some small math to it. Guys, let's go ahead and just take a look at where we would actually have the bears control this chart, that's not going to be until 19,000 on the daily. No risk of that. This chart is still bullish. We're going to hold our momentum as long as we're above 27,000. Wow, did we just... This thing is all over the place, guys. Like, that would have been a perfect buy, but okay, this chart just wants to be bullish as heck. And so that was a very shallow retracement and a very bullish pump back up. But that would have been a perfect snipe. But guys, sometimes I miss a trade because I'm making a video for you guys. So you're welcome. Yeah, but oh man, what a perfect setup that was on the 4 hour. Anyway, for the, again, we're going to hold our momentum as long as we can close the day. Okay, close the day above 27,455. That would suggest that we could have the possibility for another push to the upside. And again, with the volatility pivot beneath us, basically at our back, that could get us to maybe 28,000, maybe even to the $30,000 area where I have these hypothetical ranges in place here. And don't be surprised if we get stopped at 29,400, okay? I mean, there might be something in between there. See a little wick right here, so maybe halfway up, maybe 28,700. I don't know how this thing could chop through this if it does continue to go. You also see that we got limited at this line several times over here, so maybe we do get limited here and we just chop around and pull back even deeper and then we go. But at least you have some concept of where we might ping pong off of. And just look how this line was respected, just so perfectly, okay, guys? Like, I could have chosen this wick up here, right, as the hold current momentum level, which I think a lot of people would do, right? They would just say, oh, well, here's the wick high, we have to breach the wick high, and then if we get above that, then that's bullish. But look what we're doing, right? Our candle close is what's significant here for our momentum. And so again, these levels are picked very precisely, and please do keep them in mind. I don't think we have to really say too much about that. Again, bulls don't lose control until we breach under 25,890. So as long as we're holding that $26,200 level, totally fine with the daily chart. Let's flip over to the weekly just to give you some type of a macro perspective. And on the weekly, you can see that we're in very good shape as long as we're above 25,000. I put it at 25,100 because I do expect this 200 EMA to pop up, and I also want to ensure that we keep a hold of the 50 EMA there. Which should ensure very solid support down here. That would also align with this mid-channel diagonal on this kind of a channel concept that I'm putting out. And so again, we have a lot of support in this area. You can see these wicks over here, right? So even if we did come back and break back into this channel just to kind of scare people, right? Then the risk is that we would put in some type of a double top and then, basically work our way back down. But that doesn't have to happen. This just shows that we have this supportive zone right here to bounce off of. And so we could skim off the top of that, which is what I would prefer, sort of like what we just did on the 4 hour, and then do another push, and then, maybe make a decision at that point, right? And I do see the possibility for one more push as possible, but having a little bit of consolidation after this drive up would also be nice, just to kind of fuel up the gas tank and then do a push. That could get us as high as 30 to even 33,000, which we do have wicks in this area, right? So you can kind of see that this is a natural area for us to be heavily resisted at on this chart. If we do just kind of zoom out a little bit, that's the top of the chart essentially. And so it would be a natural place to just kind of get rejected. Now, getting accepted above there, oh, that's going to be super bullish, guys. So don't even know if we can dare to speak about that, because that's when those $50,000 targets start coming into play. But hey, let's just deal with $28,000 to $30,000 right now. And again, on the weekly, which closes in 1 day and 8 hours, so not tomorrow, but the day after, we are going to have the bulls in control for the first time on a weekly close for the first time in like almost 2 years. If we can close above 26,225. So a very significant number, not today, but tomorrow. And or the day in 1 day and 8 hours. Depends on your time zone whether it's tomorrow, right? Guys, the volatility pivot again for the weekly is 25,100. So I'll still have a bullish perspective if we're above 25,100. But I mean, it's just going to look super bullish if we're above 26,225. And then we don't lose any of our momentum in a significant way unless we're underneath this kind of a $22,000 area. So yeah, guys like Crown and whatever, they're not looking at this channel the way that I'm looking at it. Maybe they're looking at certain measurements in this area, and so they suggest that maybe we could do a dip all the way back down to 22,000. In my mind, we're out of this channel right now. So yeah, this could be a fake out. We have another day and a half basically to just have that become a wick, and it was just a fake out, and then we could come back to this $22,000 area. But if in the next day and a half we hold this line here, then in my opinion, we're just going to make a little bit of a bull flag here and then possibly shoot up. Okay. And again, bears are going to get wrecked. Okay. Because they're probably seeing some type of a bearish divergences and whatnot. And they may not be seeing what I'm seeing here on the chart. Okay. They may not be calculating where bulls are in control on the weekly. Okay. So it's okay to have a little bit of bearish divergence, but again, like the trend is your friend until it ends, and this thing hasn't ended yet. So don't fight the chart. Don't just short just because we're pumping. That doesn't make sense. Okay, you're going to be wrong every time in an uptrend. You'll be right once at the end, right? But you're going to be wrong every other time, right? So the trend only changes once, but it continues many times. And so don't short in an uptrend. Go long in an uptrend when you're at support, and only short if we're in a downtrend, in my mind. Okay, guys. Yeah, bears don't gain control unless we're under 16,772. So let's just say that the worst case did happen and we kind of like pull back here. Then as long as we make kind of like a double bottom in that area, then this chart is still going to be just a neutral chart. Okay, that'll just be part of the bottoming process basically, and so nothing really scary will happen here. If we do get under 16,770 at our current levels, for whatever reason, banking collapse, whatever, then bears are going to take control, and maybe some of those lower targets that the perma bears are so fixed on might come into play. But we're far away from that. Not really in danger of it, guys. Did want to give a little bit more of a detailed analysis this time. We can see that if we just take the lows to the high here, that yeah, you can see that just a bullish retrace. Let's just assume that we have topped out here, and that's not guaranteed yet, but let's just assume that we have. Then even a bullish retrace could be as low as 25,000 just by the fibs. Okay, so that'd be no skin off our back. That'd be very bullish. We did already, tag this area down here, but we could come as low as this 20,000. Well, I don't know. I don't think we really want to violate all of these things, but so far we're just being incredibly bullish. I have my thesis. I'm in bull mode right now, and I'm trying to make arguments against it, but I just don't see it. Let's see. Maybe we can check out some divergences or something. And I mean, we basically have a hidden bullish divergence that is playing out on the weekly here. So I don't really see that as an issue. Look at the 5-day. We're making a higher high on the RSI on the 5 days. That's not an issue. 3-day. Yeah, we are making a lower high on the 3-day, but this move isn't done yet. So, we can't just judge it as being done. But that does suggest that we might have a limitation there. On the 2-day, yeah, this is a bearish divergence of sort, but that could just suggest a pullback. Assuming that this thing's even done driving up. And yeah, also on the daily, we do have that possibility for another bearish drive. But again, guys, the RSI is in the bullish control zone. So, we really do have to let the bulls, take their shot at this point. This circle doesn't mean anything. Let's look at the, I mean, the MACD looks fine, okay? Yeah, I could see the possibility, but you know what? I don't buy it yet. I don't buy it yet. I'm just gonna follow this trend. Let's look at the jewel really quick. Jewel's pointed up. I could see this thing continue to go over the 2-day. The daily is starting to curve, so maybe we're getting up there. It might start to curve out a little bit. Maybe one last pump. Let's look at the weekly. That's the 2-week. Let's look at the weekly. Weekly turned down, but then it's turning back up. So we could have again like another thrust, but we're just gonna have to pay attention to it. It's in like an ambiguous zone here. Let's look at the 4-hour. Yeah, 4-hour is turning down with some warning. This could be a deeper retracement. So just be careful on the 4-hour. This could end up being a pullback by the end of the hour, or maybe the next 4-hour period, or over the next few couple 4-hour periods. And it doesn't have to be anything too severe, but we had a huge drive up, so having a little bit of a cooling off period, that's perfectly fine. And again, going sideways is the same thing as going down. So if the chart just wants to go sideways and kind of chop this out, sort of like how it did up here, right? Or up here, just want to go sideways and just chop this thing out, that could also be a way to cool down. It doesn't have to drop down to like 23,000, 25,000, 20, whatever thousand. It could just kind of grind this area and then suddenly pop up again, okay? So that's it in a nutshell. There's your alpha for the day, guys. Stay safe and happy trading.